Value Stack podcast is now sponsored by Coinbeast.com. If you need extra one-on-one time to get your Bitcoin questions answered, book a call with a Bitcoin pro at Coinbeast Connect to get expertise you need with topics ranging from security, privacy, mining, Lightning Network, and more. It's easy to get started. Simply go to Coinbeast.com, click Connect at the top of the page, and book a call with the pro for the topic that you'd like to discuss. So thank you guys at Coinbeast for sponsoring this show, and check them out at Coinbeast.com to get the Bitcoin support you need. Now, on with the show.
Welcome to episode 10 of Value Stack. We've hit double digits. I'm Shaper Funds, also known as Bo in the meat space, and I'm here with my esteemed co-host, BTC Bat. How you doing today?
Episode 10, man. We made it. We're in double digits, not canceled. Lot to cover this. Lot to cover this week. I want to say a couple things. Thank you guys to the new subscribers. We've got like 7 or 8 new subscribers since the last episode, which is like 10% growth rate. So that is a higher growth rate than gold, by the way. Maybe a little foreshadow to our boating accident this week, but yeah, man, it's what we had all-time highs this week. There's been all kinds of news in the financial industry, sort of what seems to me is the beginnings of institutional acceptance and adoption of Bitcoin and crypto, but mostly just Bitcoin. So yeah, man, great week. Glad we found a time to get together this weekend. Happy Saturday.
Yeah, happy Saturday. Thanks to all the listeners. Yeah, we hit all-time highs, quickly raced up just over 67,000. Currently back at about 61,000. The big news this week was we've got 2 futures ETFs. So Bitcoin ETFs based on futures. We've got BITO that began trading on Tuesday, and BTF, which just started trading yesterday on Friday. So, I remember the first time earlier this year when Bitcoin, or I say the first time it broke to all-time highs, but the last time in 2021 that Bitcoin hit all-time highs, I think it was on the day of the Coinbase IPO.
Yeah, it seems to happen like that, right? Like you get the big news, and that's like the crescendo, kind of the top. I know that personally, several people who I've been telling Bitcoin about for quite some time loved to buy above 60, but hated it at 30. I don't make fun of those people. I don't fault them. Like, I get it. Like, if you don't understand how this works, it can be a very daunting mental test, but as you've, built your fortitude over time, you understand that when there is fear, that's where opportunity, and when there's euphoria, that's when there's risk.
For sure. Yeah. And we're going to dive a little deeper into the new futures ETFs products that are on the market. Of course, our opinion is if you're out there buying Bitcoin, you're best off actually buying Bitcoin and securing it with a cold storage. However, if you have a retirement account and you want to maintain it as a retirement account, and you want that Bitcoin exposure, we'll dive a little deeper into how we would recommend getting that Bitcoin exposure inside a retirement account, kind of comparing the Grayscale Bitcoin Trust, the Osprey Bitcoin Trust, along with the 2 new futures ETF products out today. Just want to quickly say, with those new futures ETF products, you're probably going to get somewhere between 5 and 10% less than the performance of Bitcoin. because of contango decay, the way that the futures are perpetually rolled over,
Right.
the contracts rather. And so you could expect to underperform Bitcoin by that 5 to 10% plus the expense ratio. So yeah, I just wanted to touch on that. You might want to steer clear of the new.
Yeah, I won't be buying them. For those who aren't aware, contango, I believe, is when the futures price is higher than the spot, and backwardation is when the futures price is lower than the spot.
Right.
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 Yeah, man. I won't be touching any of the futures-based ETF products. The only one that I'm even remotely interested in is Grayscale, because it's holds Bitcoin and because they're the largest Bitcoin trust, and most importantly, because I believe that at some point the arbitrage between the net asset value discount that the fund's worth right now versus what the Bitcoin is worth in the fund will close upon the time that they convert to an ETF. So it's really like, that is my thesis for holding GBTC. Nothing else. Like, as opposed to like holding Bitcoin. That's why I would hold GBTC.
Yeah. And some other big news this week was that the Grayscale Bitcoin Trust filed to convert to an ETF. So they're trying to convert to a spot ETF. Of course, the SEC hasn't approved the spot ETF. Just to take a step back, spot means the price of Bitcoin today, the price that you see on Coinbase or Gemini. And I mean, let's just get into it. Why don't we talk about this?
I want to make one comment on that about the filed of the spot ETF. So I was listening to the CEO of Valkyrie Investments. I forget her name, but she was on with Bitcoin Magazine, and this was interesting. She mentioned, she's like, we filed
Leah.
Yep. She's like, we filed for a spot ETF in January.
Mm-hmm.
Still hasn't been approved. Meanwhile, they filed for the futures ETF, much later, just like that. And it was something, without, I don't want to like misconstrue her words, but it was something due to like a 33 Act fund and then a 40 Act fund and like the different regulatory oversight that's associated with them. And basically Chairman Gary Gensler's, I'll call it guidance, but basically rules. Because if you didn't comply, you weren't going to get it approved. At least that was my kind of interpretation of it. So that's why you've seen these futures-based ETFs come online, and we'll see several more in the next couple of months. The spot ETFs are under application. They just haven't been approved. So
yeah, it certainly seems like with the passing of the futures ETFs, that at least the SEC is interested in moving this along.
They're interested in allowing people to do it in a way that they still maintain control, which, as we know, is a bug, not a feature.
Right. Well, let's revisit this later in the podcast. Actually, we've got some other things that occurred this week that I would say are, huge, absolutely huge. Interactive Brokers is offering a crypto trading and custody solution. For those of you who don't know, the majority of independent financial advisors in the United States use Interactive Brokers. They're kind of like a Schwab or Fidelity for independent financial advisors. They also, they do like the prime brokerage services for hedge funds and other institutions as well.
They're adding it through Paxos. Is that right? Like the platform that they're integrating with.
Yeah, it's pretty cool. I wouldn't say that's the biggest news of the week, but definitely cool, giving independent financial advisors who, let's face it, are probably more inclined to adopt Bitcoin than someone who works at a firm and is subject to the groupthink behind the 100+ year old brokerage houses in the United States that with the exception of Fidelity, who tend to pretty much badmouth all crypto. So nod to you, Interactive Brokers. We'll see what that means for their business and for institutional adoption of Bitcoin over time. Okay, I want to say this is the biggest news for me this week. The Houston Firefighters pension just announced a position in Bitcoin and Ethereum, but at least Bitcoin.
Not gonna make it.
That's pretty cool. Pension funds are I mean they're in the dark ages. Well, I won't say they're in the dark ages.
They have institutional mandates that require them to invest in things that are not going to give them a positive real return. That's not because they have to. Well, that's not because they necessarily want to. It's because they have to. There's certain regulatory requirements. Pension funds can't go put in 100% of their, municipal firefighters pension fund in Bitcoin. But it's encouraging to see that they are embracing it and having, like, the pensions control so much of the fixed income market. And I imagine they control a huge chunk of the equity markets too. Although to a lesser degree because of those mandates. So I think, like, this ties into, PIMCO as well, I think, who also is talking about buying Bitcoin. These fixed income managers are looking and they're like, what do we do? There's like the zero bound of interest rates is already here. Real yields are negative. Depending on who you quote, they could be anywhere from, negative 1% to some people say negative 10% or more. So it's like, it's just that the first mover, like, somebody does it. It's like Michael Saylor, right? The first company to do it is Brave. And then it becomes almost the norm to do so. So in my mind, this is like the canary in the coal mine, if you will, that is going to say, oh, well, they did it. Well, why don't we do it a little bit? Let's get a little bit, get a couple of those Satoshis.
1% of the fund. I mean, very often they'll hold like 40-50% of the fund in fixed income. And as you mentioned, you have severe negative real yields. And then they have liabilities in the future. They have to pay out the pension holders that have been paying into this their entire career. And right now they're mostly invested in something that's guaranteed to lose them purchasing power. So why not look for alternatives? And
still, even though the kind of the bait and switch is, they're paying these employees, they're paying their pension liabilities in a depreciating currency. So it doesn't keep up with cost of living, but it will allow for them to, fulfill their obligations on paper in nominal terms, at least.
Yeah, I think you're right. It's the canary in the coal mine. They're the first in the United States. You definitely don't want to be the last. We'll see who follows them, but pretty cool that pension funds are getting in the Bitcoin crypto game. So cool. And then very much related to that, PIMCO, the world's largest bond manager, I think $2.2 trillion bond manager, announced that they're increasing their position in Bitcoin. And same idea. If you're a bond manager, you're focused on an asset that's going to lose you money. So
there's this increasing idea of Bitcoin now being used as a hedge for inflation, which to me is so silly, because I'm like, hello, we've been saying this for like way before CPI was 5%. We were saying it when CPI was 1.5% and saying that the CPI was wrong. And now people are starting to, and it's not their fault again, like, most people aren't spending a lot of time and energy to like break through the headlines on this stuff, right? So I don't fault them for it. But yeah, it is like interesting to see that like now people are like, oh, like especially like people like Peter Thiel, I heard Kevin O'Leary was on the Pomp podcast talking about just like there's this more accepted narrative than there was a year ago that Bitcoin is a reliable inflation hedge. I know we're going to talk about Jack later, Jack Dorsey. So I'll just kind of leave it there for the moment.
Yeah. Yeah. Well, yeah, we've been saying Bitcoin is a good inflation hedge for years now. Well, what's the original inflation hedge in your mind? The world's best inflation hedge for most of history,
It's been
human history.
gold, right? It's been gold. And the reason it was an inflation hedge is because it costs physical, real world energy to get that gold out of the ground. You can't just
Proof of work.
Exactly. You can't just push a button and increase the supply of the money. That is the exact polar opposite. Like we used to have, there's something called seniorage. Have you ever heard of that term?
I don't think so.
So seniorage is the difference between the cost to create a money and what the money's face value is. So like if a $1 bill costs 5 cents to make and they assign it a monetary value of a dollar, then there's a seniorage tax or fee, whatever you want to call it, that the government retains of 95 cents in that case. The seniorage is now, basically infinite because there is not even a physical real world cost to print this. It's all digital. But the reason that gold was that way is because it took proof of work in order to get it. And Bitcoin did that, but just even further innovated on that proof of work mechanism by ensuring that the proof of work rate would always stay constant.
Yeah. I want to know the seniorage on the $1 trillion platinum coin.
It's $1 trillion.
I mean, the platinum has to be worth a couple grand, right?
Yeah, that's true. I know we don't talk politics a lot on this show, but it just reminds me of Biden's plan where the infrastructure plan is going to cost $0. I was like, hold on, dude. What? I know what you're saying. Like, I know what you're trying to get at. Like, it's going to be net zero, but it is definitely not going to cost $0. Oh, just made me think of that. Yeah. But, the reason that gold is no longer gold's properties are still the same as they were 1,000 years ago. But people, given a free market and two competing monetary systems, will choose, if rational and allowed to choose, right? Like if they're under regulation or military force, maybe they can't choose, but assuming they can choose and assuming they're rational, they will choose to store 100% of their savings in the best money and 0% in the second best money with enough information. And so to me, the reason that gold, although its monetary properties haven't changed, the reason that gold has no longer kept up with inflation is partially because of the presence of Bitcoin. Because now gold is not the answer. And if it's not the best money, it's worthless as money because people are only going to take the best money. Now, there are hundreds, if not thousands of monies today. But that's why I made sure to point out that assuming that they have an open market and freedom of choice. Most people do not have this. Like they are forced to save in their local currency. We are forced to transact in our local currency, even though we have the liberty of being able to save in Bitcoin. So I think that it's eventually gonna, that is just becomes more and more obvious because Bitcoin's digital, because it's globally connected, because it's 24/7. Like people are going to just eventually stop using they're not going to use their fiat currency for savings. And we already mentioned like gold has good monetary properties, but it's inferior to Bitcoin. And if it's inferior to Bitcoin, it's not going to become a money. There'll only be one. Like that's why silver is dirt cheap, but gold is very expensive.
Right.
You know, there was a dual monetary system for a while. Maybe we do that for a little bit, where like Bitcoin is the reserve asset, and we're forced because of regulation or political environment to use fiat currency. And we're sort of on this like dual currency standard. I've thought about that, but I just don't see how people would allow that to happen. So it would have to be like forced.
Yeah. I wonder if in time gold will trade more at its just industrial use value, more like copper than it does today, as what used to be what backed the whole fiat. I mean, it wasn't a fiat system; it was the gold standard. I think gold had an investment value that will probably continue to have for a long time, but I think with enough time, gold trades more for its industrial uses more so.
Right, and jewelry. Yeah, like that's my favorite part about Bitcoin becoming the world's currency is not just getting super rich, but it's be able to buy gold chains for really cheap.
Well, I think that's a good segue into this week's voting accident.
All right, it's time for the boating accident of the week.
Oh, Bitcoin hit a new all-time high this week.
And you smell that?
Yeah, I smell it.
Peter Schiff's regret. So our boating accident this week is Peter Schiff. Now I want to say I like Peter Schiff as a person. I think he's entertaining. I think he's fairly intelligent. I think he's a critic, and I agree with him on, I would say like 98% of worldview, based on what I've heard, at least when it comes to like economies and the Federal Reserve and all of that. But he just has this like block in his mind, and he just refuses to embrace Bitcoin, and will literally ride his gold back into the ground. Thankfully, his son Spencer is a Bitcoiner and likes to troll him on Twitter. If you haven't seen Peter and Spencer Schiff's back and forth commentary on Twitter, it's some of the funniest content I've seen. Just like, because Peter it's like you gotta appreciate the guy. Like, he's so wrong, and he's just so insistent on not giving in, and I admire his tenacity and his ignorance, I guess, to a certain degree, because his son is literally like, Dad, no, like you taught me about, I would imagine, right? Like, he's like, Dad, you taught me to be skeptical of the Federal Reserve. You taught me to connect all these dots. Why can't you see this? So, I think this week, Peter Schiff, we've got to acknowledge he's got to be having a tough time as gold continues to plummet relative to Bitcoin. I think when I first told our friend JJ about Bitcoin, like really it was like 7 ounces of gold or something, and now we're like 30 ounces or I don't know the exact number, but it's like 2 or 3x what it was in gold terms, which is even less than it is in dollar terms. Like, it's appreciated more versus gold than it has versus the dollar.
Yeah.
So I think that could be part of what you're saying, right? Like, although the finite properties of gold, the monetary properties haven't changed, there's this sort of deflationary monetary premium getting sucked out of gold and transferred into Bitcoin. And so even though gold is like still got these properties that are superior to fiat, it's like overvalued because it's like has this monetary premium in the past that's slowly being reassigned elsewhere. So thank you, Peter Schiff, for always giving us a good laugh. for being a diehard gold bug. And I cannot wait to make a necklace out of one of your gold bars someday. I will buy it at. I'll give you 5,000 sats for a kilogram of gold. It
Oh,
seems.
he
Is
might
that?
not want to take that deal today, but he might want to take it in about 10 years.
He's gonna want to take it in 10 years. He's gonna want to take it.
Yeah. Yeah, poor guy. I think his website, he actually accepts Bitcoin as payment.
Yeah, he does. What does he do? Sell it for gold?
No, that's what he says he does, but maybe he doesn't. That's why he's our voting accident of the week.
Yes, exactly. That's why he's our voting accident. Perfect, though.
All right.
You know he ain't sold it all, dude. You know Peter Schiff's got Bitcoin. This is all a stunt. Him and his son to get social media traction.
So I used to really believe that. I used to really believe that because it was so entertaining, his back and forth with his son Spencer.
Right.
But after listening to his debate on What Bitcoin Did podcast against Greg Foss, now I'm convinced he believes his own bullshit. I'm convinced of that. Like I was like, this guy is serious.
He really is full of shit. And dude, and actually, like, one more thing I want to mention on Peter before we transition. So when I was in college, I studied international monetary policy, and I started learning about Peter Schiff way before my Bitcoin terms. And I got introduced to this book by him, Currency Wars by James Rickards. The Making of the Next Global Financial Crisis, which I believe was written in I can't figure it out in 10 seconds. It ain't worth it. It was written in 2011, so right after the financial crisis, kind of during that run up of gold, post financial crisis, when it went to like, from couple hundred to like thousands. And so I appreciate Peter Schiff because indirectly he helped me go down the Bitcoin path, because his skepticism of the Fed and others made me really ask hard questions about what is money. And I think part of just coming off of the financial crisis and studying it in college, like basically living through it and then studying about it right after, helped me kind of synthesize that something wasn't right. And so although I sort of feel for Peter, because he's done wonders for my net worth, but I don't know how he's done for himself. He's like, in the last couple of years, he's probably not. I think he said in this Pomp episode that like he would be, far richer if he invested in Bitcoin. And of course, like, duh. But I mean, look, he's got a successful track record. I think like in his heyday, like he was a great fund manager, and I appreciate what he's done for me, at least, like, and helping figure out what money is. So thanks, Peter Schiff.
Yeah. Thanks, Peter Schiff. Cool. Well, I want to just do a little bit deeper dive into the Bitcoin products that you could buy in a retirement account. The reason I say buy in a retirement account is because if you have a brokerage account and you want access to Bitcoin, like I said earlier, go buy Bitcoin.
Yeah.
Yeah. Just get it out of the brokerage account and buy Bitcoin and hold your keys. But like I said, if you do want that exposure in a retirement account, there's currently 4 good options out there. You've got 2 Bitcoin trusts that you can buy. You've got GBTC and OBTC, the Grayscale Bitcoin Trust and the Osprey Bitcoin Trust. Grayscale's been around for many years. Osprey has been around for about a year. And then as of this last week, now we've got 2 futures Bitcoin products that don't actually hold any Bitcoin, but should trade based on the futures price of Bitcoin. As I mentioned earlier, you're likely to underperform due to that contango decay within the futures products plus the fee. So if you're going to buy BITO or BTF, expect to underperform by maybe 10% per year. relative to whatever Bitcoin is doing. Now, on the other hand, you've got the Grayscale Bitcoin Trust and Osprey Bitcoin Trust that actually hold Bitcoin and then have shares of a trust that trade in the market. So just to make numbers easy, pretend they go out and buy $10,000 of Bitcoin. They issue a certain number of shares that are just units of the trust that trade on the market, and then people buy and sell those shares. It doesn't so much matter how much Bitcoin they own, other than do the people on the market, like how do the people on the market value that $10,000 that they say they own?
Right.
And right now, people are saying that the $10,000 that they own is worth about $8,000 to the trust holders in the market. Right now, the Grayscale Bitcoin Trust trades around a 20% discount. It's been anywhere from 15 to 20% lower than the value of the Bitcoin that they own. Osprey is closer to about 10% discount. The difference there is Osprey charges, I think, about 0.5% fee.
The fee is a lot less, yeah.
And the Grayscale Bitcoin Trust trades has about a 2% fee.
It's a 2%. Yeah, and if you if you compound that fee 10, 20 years in the future, that's why, just so our listeners understand, that fee is not priced in for the single year, right? Stocks and trusts and everything is based on forward expectations. And so there's that 2% compounding annual fee versus a 0.5% compounding annual fee. To that point, though, if this is a 1 to 2 year hold for you, and because, let's say, just in that example, if Osprey's at a 10% discount, Grayscale's at a 20% discount, Grayscale has a 2% fee, Osprey has a 0.5% fee, it would take, 5-6 years for the Grayscale fee to eat up the difference in net asset value discount. So if you think that Grayscale is going to come back to arbitrage, meaning back to the zero, not discounted relative to their Bitcoin, and you think it's going to happen within a 5-year time frame, then in my mind, that is why I hold GBTC as opposed to OBTC. I think their discount will close for both of them, but the discount is double for GBTC, which is 10% greater. So I'm willing to pay that 2% annual fee per year because I still think I'm going to come out several percent ahead on top because of the larger discount window, even with the higher fee.
Right. The variable is how long it takes them to convert to spot ETFs.
Right. And over a 10-year hold, that would not be wise. Over a 10-year hold, Osprey would be better because 10 years of 1.5% would be 15. So that would be bigger than the discount, plus the compounding effect of
it. This isn't investment advice, nor do I have any insider information, but my money's on spot ETFs being approved probably in the next 6 months, maybe the next year at the latest. So in my mind, let's say it takes a full year, I'm going to get the performance of Bitcoin plus about 18%.
Yeah.
I'm going to get minus 2% plus 20 when that discount closes to net asset value, when it becomes a spot ETF. An ETF, virtually by definition, trades at net asset value because if it didn't, it would be arbitraged instantly through the creation redemption process of new shares of the fund. So my advice, which isn't financial advice, is let's just say what I'm doing with my own money is I'm buying the Grayscale Bitcoin Trust. That's to
the moon.
That's my horse.
To the moon. That's mine too. I think it's our largest holding, except for Bitcoin.
Yep.
Dude, did you see, speaking of the funds, did you see how the the Valkyrie fund changed their ticker symbol from, it was going to be BTFD, and they made it BTF. I might have bought it if they had that ticker just for that. Missed opportunity.
Yeah.
Leah.
Missed opportunity.
What else we got? We're about 35 minutes in already. I think we still got a few more things, huh?
We have one more thing,
J-
for sure.
Jack.
Jack.
What was the other? What
So
was the other one? That was
that's
it.
that was it. Yeah.
Cool. I could talk about Jack for 10 minutes.
Yeah.
Um,
Well,
so
let's go.
Jack Dorsey tweeted. Do you want to pull it up since I'm screen recording and you can read his tweet? Um,
Yeah.
he tweeted about hyperinflation. All right. He did not say inflation. He said hyperinflation, aka what happened in Zimbabwe, aka what happened and is happening in Venezuela, aka what happened to Weimar Germany, aka what did he say?
So his exact tweet was hyperinflation is going to change everything. It's happening.
And then shortly thereafter, he said something about the US.
He said, it's not a wish, nor do I think it's positive.
Above that. I
I'm
think
not,
he said it's coming to the United States.
yeah.
Yeah.
Oh, he said it will happen in the US soon, and so the world.
Boom. It's coming. We warned you on the Value Stack podcast. One of the largest, most influential people, CEOs of Square and Twitter, CEO of two successful publicly traded companies. Probably, I would imagine he's like one of the richest people on earth. He's probably like top couple hundred. He probably will be the richest man, one of the richest men on earth based on his Bitcoin holdings soon. This guy is telling you hyperinflation is coming. He sees it in his business. That is why Cash App is diving in to Bitcoin. That is why Square, the parent company of Cash App, is now creating Bitcoin hardware wallets. That's why Square, the parent company of Cash App, is now going to be creating like you'll be able to bring like not more industrial size, but like personal mining machines that you can plug in your house. Every person can put it in their home. So like this, it's not just like us anymore. Like the inflation narrative that we were talking about, it's being talked about in the billionaire circle. And specifically, Jack mentioned hyperinflation. Hyperinflation, Bo, can you look up what the definition is? I believe it's, and I might be wrong on this, but I think it's like when it's double digit inflation rate, like month over month or something like that. But I for some reason, I think that's wrong.
So the exact definition is monetary inflation occurring at a very high rate. Let me
Yeah.
see. I've heard different numbers.
Right. To me, 10% is a very high rate.
Typically measuring more than 50% per month.
50%. Whoa. Dude, I can't even imagine living in a world where next month the chicken that I bought is 50% more, and then the month after that it's 50% more. You're going to see some really interesting behavior because people will start hoarding, which will create even further pricing pressure on the stuff that's left. And then, but like, I almost feel like you might need to hoard some things, like, but I'm not gonna go out and like hoard toilet paper and all this other dumb shit, dude. I'm gonna hoard purchasing power because I don't know what I'm gonna need or when I'm gonna need it or where I'm gonna need it. So why not have this money that's everywhere, 24/7, that is accepted or will be in that environment at least accepted for basically any good, service, or labor, That's what I want to hoard. I'm hedging for the future uncertainty that hyperinflation is going to bring. Because if I hoard steaks and then I become a vegetarian, it won't do me much good. And they want you to become a vegetarian, by the way.
Eat insects, you'll be happy.
Eat the bugs.
Yeah, and the transition from high inflation to hyperinflation typically doesn't happen because it's like that new dollar is printed, the dollar that breaks the camel's back
It's
necessarily.
confidence.
It's the confidence is lost. And typically that can happen quite quickly when people
Insane.
accept that hyperinflation is there and they want to get their money out of US dollars and into anything else. That's when things go from inflation to hyperinflation. Now, uh, I'm trying to reconcile this with my understanding of Jeff Booth's thesis, which is brilliant. Jeff Booth, the author of The Price of Tomorrow, which admittedly I haven't read, but I probably listened to him on 10 different podcasts talking about his thesis.
So you know what it's about, yeah.
And so, I mean, the way that I understand it is, in technology is what's the word? Exponential. Technology is exponential, and productivity gains are really hard to measure. Productivity gain is basically the amount that goes into a certain amount of output. So the amount of goods and services that the economy can create for a given level of labor and materials and everything that goes into that. And so productivity gains are hard to measure. Different people do it different ways. Jeff Booth, I think, believes that we're currently at about 4%, maybe 5% per year. But because of the exponential nature of it, in a decade, we could have productivity gains north of 10%, 12% per year, that we're making things more efficiently. Now, those gains only really accrue to people that own a large amount of assets, that own equities and the businesses that are behind those gains, real estate, equities, small business owners. Even if you run a grocery store, you probably need to hire less people than you did 10 years ago. Yep. So the productivity gains only accrue to the rich, for the most part. And the wage earners are actually, they're losing their jobs because technology is taking their jobs. And they were the ones that were living paycheck to paycheck anyways. And that paycheck was going towards buying the groceries that are going up a certain, the price of their groceries are going up due to inflation, because we have to money print, not just to keep inflation high so that we don't implode under all the debt in the economy, but also because we have productivity gains and we need to print at a rate higher than that, plus that 2% inflation target that the Fed has had for quite a long time. So I guess in reconciling this, the thesis is we're going to have most of the debt is in the future. Most of the money printing is still ahead of us, because the money printing that it takes to get over that deflationary force is becoming greater every year. But even with all these productivity gains and improvements in the way that we make our goods and services, we still run record deficits and have record debt. So we can't have that debt inflate, or in other words, have any kind of low inflation or no inflation. We need higher and higher inflation to make the burden of our debts go away.
Right.
So, the M2 money supply is up 30% year over year. And it stands to reason that that trend won't continue, at least in the short term, because that was kind of a one-time deal due to COVID. But we could very well be in a situation where the M2 money supply is increasing 10, 20% per year. And again, that's screwing the people that live paycheck to paycheck, enriching the rich people. And
I don't know.
That's also, yeah.
I don't know how people are not aware. It breaks my heart. It really does, man. What? Because everything you said, I agree with. Like, most of the money printing, it's in the future. Most of the inflation, it's in the future. Most of the hard times from that is going to be in the future. It's interesting that we're kind of living in this hyperinflationary and deflationary environment at the same time. I think we're sort of
Yeah.
transitioning. We're in this transition period where the hyperinflate, like the goods and services are still going to be around, whether we use one monetary system or another. Houses are
Mhm.
still going to be here. Boats are still going to be here. People are still going to eat meat if you fight back. And, these things will just be repriced. And so I would say that we are living in a deflationary world with an inflationary monetary system. And this fact that technology goes like this and money printing goes like this like opposite effect causes the wealth gap.
Yep.
And when eventually the money printing is going to blow itself up, and all of these goods and services are still going to be around again. So like that, people are going to say, okay, we must reprice everything now. And these two systems are going on concurrently. Like the price
Mhm.
of meat, we're talking about, I should clarify this actually. The price of meat or the price of things in the grocery is going up in dollar terms. The price of meat in Bitcoin terms is going down. So depending on which monetary system you're paying attention to, one would say things are getting cheaper. One would say things are getting more expensive. So I think the goal, because they're happening at the same time, the goal is to get your paradigm across the bridge. Like,
Mhm.
stop pricing things in dollars. Stop calculating your value, your time in dollars, because it's going to become a more and more compromised measurement tool. Like, it already has become less effective, less precise as a measurement tool because inflation devalues the accuracy relative to yesterday, what the tool could measure. But Bitcoin is verifiably finite. So it will, like, once we get out of this inflationary currency, we're going to fully go into the deflationary world, and we'll have
Mhm.
a deflationary currency that sits perfectly in harmony with this deflationary productivity growth rate that's caused by technology. And
Yep.
so those two things will stop the bleeding of this like exploding wealth gap, because exactly what you said, dude. People work wages, like people, like if the capital owner, the equity owner could not make money off of you, they wouldn't hire you. So there is no, like, because the way that equity owners make money is you sell them your time, labor, expertise, they pay
Mhm.
you. They then take that time and maybe through economies of scale or through unfair wages or through unfair pricing on their product, sell your labor that you sold to them for more. They add on like a value add and then sell it for more. So like they retain the excess profit of your labor. And
Yep.
so like it's increasingly becoming easier and easier to do that as prices go up, but wages don't keep up at the same rate. So like
Exactly.
I feel like eventually when we get off of this inflationary standard, and to be honest, Bo, this is why this is the most important reason for Bitcoin is to stop inequality, dude. And
Yep.
it's not like I stop inequality, world peace, all this shit. It's like no, like it's global inequality.
Yep.
Like people in other countries they can't afford to buy the camera and microphone equipment that you and I did. And because of that, they can never start a podcast. And because they never can start a podcast, they can never develop a second revenue stream while they're sleeping. And
Mhm.
it's like these things just compound on themselves until it's unescapable.
Yep.
And Bitcoin stops that bleeding that has plagued literally like Alex Gladstein and Lex Friedman. Dude, one of the best podcasts I've ever seen. It talks exactly about this, about authoritarian regimes, how more than 50% of the human population lives under oppressed authoritarian regimes, and they can't even like go to town square and like say that our government's corrupt because they'll get killed. And the reason that this government has control over them is because they control the money, and they control the military because they control the money, and people in their country have to eat. And so because they have to eat, they're like, well, the government controls the money. I need money to eat. I guess I got to work for the government as a military person. It's of course it's more complex than that. But my point is that like like it's not just like one. I mean, it is as simple as like the one thing that sets off the snowball that rolls down the mountain and gets bigger and bigger and bigger and bigger. And it's very, if you're standing at the bottom of the mountain, you might say it's like you might draw a different reason for why the snowball was created than if you were standing at the very top and saw the beginning. So, and it's kind of a loose analogy, but like, I do think that this is more important than getting wealthy. This is not an investment. This is about freedom and about liberty and about human dignity, really, man. Like, humans are not treated with respect unanimously, depending on your financial position and what country you're in. Now, there's other reasons why maybe people shouldn't be treated the same, but assuming all else equal, like the economic opportunity from the very beginning, where you're born, shapes so much of what your future will become. And although we're both good-looking white dudes in America who have privilege upon privilege upon privilege, it is not hard for me to see how that is not the same case for most people. And I'm okay with giving up a little bit, because like ultimately it's like you get, maybe this is me, but like I get like satisfaction out of non-monetary things like friendship and relationships and seeing other people thrive and enjoy themselves. So to me it's like if I'm giving up my like a little bit of economic privilege because now US hegemony of the dollar system is no longer dominant, so every other country is more competitive. So us as US citizens are less on top. We're still doing fine. But like, my question is, and it's more rhetorical, but like, am I even giving up anything if I'm gaining some other sort of, visceral feeling instead? Like that kind of like oneness of like feeling like you're doing something for the right purpose. Like, dude, cocaine is not going to get you that same feeling. It doesn't matter how much you get. There's not that level of peace and like just presence that you get when you feel like you're aligned with your own values and like what's important to you. So anyway, I'm rambling. I'll shut up.
No, I agree with all of that. I think inequality is incredibly destabilizing. It's rampant. It's getting worse by the day. It's exasperated by what occurred during COVID, putting a bunch of small businesses out of business, and printing the shit out of every currency in the world, thereby, just increasing that gap between capital owners and labor providers. The function of capitalism is to improve our collective lifestyle. I think that the function of capitalism is to find better ways of doing the things that make us whole, make us happy. And right now, capitalism is viewed in a very negative light because people associate it with the inequality. And and Jeff Booth talks about how Bitcoin as a deflationary currency matches that function of what capitalism is supposed to mean. It's deflationary, meaning everything should get cheaper over time, meaning the value that someone in Silicon Valley or on Wall Street is creating accrues to the person that's a plumber here in town. And today, if people could wrap their arms around Bitcoin and start saving 5%, 10%, whatever they can, if you're not living paycheck to paycheck and you could just save a little bit into Bitcoin, the idea is that's going to gain value over time, and you might be able to enjoy a retirement as the everyday laborer.
One of the common objections that I hear from people who are not deeply involved in Bitcoin is that, well, most people can't eat. It's easy for you to say that they should save, but most people can't save anything at all. And I just like, I'm sorry, but I don't agree with that. Like, even people in third world countries, if you have food, if you have shelter and you have a little bit extra food, you can decide to sell a little bit of that extra food and have, maybe it's 500 Satoshis. It's 20 cents worth. I don't know. My point is that like the excuse that like the poorest of the poor cannot save, maybe to the farthest extreme is true. But I would say for the broad majority, that's an ignorant excuse, because you can save less than a penny worth of Bitcoin. It is impossible to save less than a penny worth of the dollar. You can save less than a penny worth of Bitcoin. So please do not tell me you cannot save in it. I will send you more than a penny worth of Bitcoin if you ask me. Now you are saving in Bitcoin.
Yeah. Consumerism isn't capitalism. Consumerism is what many Americans have fallen into, and why they say they can't save when I think anyone can carve out 5% of their budget, put that into Bitcoin. And especially if you understand Bitcoin and you understand the value of saving, whereas a lot of people look at what maybe that 5% of their spending that they could shave off, and they think, well, my options are a depreciating dollar or stocks, which sounds like gambling, sounds like Vegas to me. I don't even want to go there.
And it is.
Or yeah. But if you knew there was something out there that was designed to go up over time, maybe shaving off 5% of your budget would be a little bit easier.
Even 1%. 1%. Bitcoin grows exponentially. 1% will become 10%, will become 50%, will become 100%.
Will become retirement.
Will become your unit of account, as far as I'm concerned. So, should we send off with any cultural tips today?
I went to a Indian crystal ceremony last night, and we played with the electromagnetic radiation of crystals when put through this little apparatus where people were giving and receiving energy. And oh boy, that was
y'all should have heard Bo talking about this before we started recording. He's not doing it justice. He was saying that like when people were like talking and energetic, that like these like waves were like appearing on the wall that were real fast, and then when everybody was calm and meditating, they were just like slow sine wave. Yo, there is some shit going on out here that we can observe, but we cannot explain. Bitcoin may be one of those things. I'm going to leave you guys with that this week. Anything else, Bo?
No, we're good.
Thank you guys for listening to Value Stack. This was episode 10, 1-0, across the double digits, just like the inflation reading. And we'll see you guys in 2 weeks.
See you guys. Thanks for listening.